So there will be a lot of things that we need to take care while we close the books out and start with the new year. So 2025 is what the year we close, and everybody knows that we follow the calendar year, not the financial year for all the US clients. So Jan to December is what the financial year or calendar year that we close. Now there will be tax filing season that already had started. The first deadline that we are closer to now is the filing of tax return for individual and the partnership, which is due on the 15th of March. There will be an automatic extension. Only when we file the extension, then the IRS automatically approves that extension for 6 months, so that the due date goes to the September, but we should not actually use that to not close the books on time. Almost all the client that we are doing, we are closing the books on a monthly basis. So ideally, we should actually close the books on time and then have the 15th March as a due date to close or get ready for the tax filing. The other clients has a due date of April 15, which is the LLC, C Corp, S Corps, which also has the extension, which is for the 6 months. So the due date also goes to the October. So there are a couple of things that we need to make sure that we do well while we close the books out. When we close the monthly books, there are still something that we don't do as part of our closing, but at the end of the year, we need to focus on getting those things done. Always review everything for the whole year while you close the books for the January, not only for that particular month. Always verify whether you have captured all the transactions, you did all the bank reconciliation. There are no transactions without payee name or the vendor name. There are no customer deposit with the name of, like, let's say bank name or unknown or deposited check, something. We should not have those kind of name as a customer's name, because it is really important for us to actually have the correct customer name in it. And the reason why we need to do this, for example, we file the 1099s for all of our vendors, right? Those vendors, if you're doing the accounting for the vendors who are actually receiving the 1099, then it is become necessary for us to tie out from which we receive the deposit and who has issued the 1099 for us. So we'll take an example. Let's say we are doing the accounting for person A and he pays certain amount to person XYZ, let's say $1,000 in a year. Okay, we file the 1099 for them, we file the 1099 NEC. Okay, and then our job is done. We have the records where we were recording the name of the vendor. We know that we paid him $1,000 and we file the 1099 NEC for that. But what if we are doing the accounting for XYZ? So now we are the accountant of this company who has actually received a 1099 NEC. Okay, so this is the form that they have received. Some different accountant has filed the 1099 for us. Now, if we are recording the deposit that we receive from that customer with the, let's say, bank or unknown, then we won't be able to tie out who do we receive this 1099 NEC for. Now, the CPA is going to review the books in detail, and this 1099 NEC is filed with the IRS. So IRS knows that one of the customer actually paid $1,000 to this company for which we are doing the accounting. But we are not able to verify with the records that we have submitted to the CPA. So CPA will assume that this $1,000 was not recorded in our books because we actually have these name as customer. If we had the name of the customer, that is person A's name in here, they can easily verify that this $1,000 is coming from that person. But if you're not doing that, that means that the CPA will assume that it is recorded somewhere else, or they have recorded in cash, and they will actually add that $1,000 on top of what we are showing in our books. That gives the client double taxation, right? So it is important for us to make sure this is what we are not using anywhere. We should always have the actual customer's name in it. If the client doesn't provide you, give them a disclaimer that your books will not be finalized unless we have those details. Even if that client still does not do it, escalate it to your manager. Manager will escalate it to me, and then I'll talk to the client individually for each one of them and then get these details. Because right now they will say that we don't have the details or just close the books. But when the CPA asks this question and they say that they will not file the tax return in absence of this information, the client will reach out back to us and saying that we did not do a good job in terms of preparing the books. We had the whole year, why did not we ask throughout the year? But they forget that we were actually asking. But we are not only responsible for asking the data and then just move on. We are here to make sure we ask the data, escalate it, continue to follow up, and do not close the books until we have the data. Let's not send any financials to the CPA or confirm to your manager that this books is done unless these things are being resolved. So this is one of the example. What are the other things that we need to do? We need to make sure that all the financial records are complete, accurate, and categorized. So there are different assertion we call financial statement assertion in terms of the audit. Whenever any CPO or the auditor reviews the books, they actually needs to comply with 5 assertions. One of them is completeness, to make sure that all the transactions for that particular year are captured. That would how we will verify that. We will do the bank reconciliation. If you are able to do the bank reconciliation, it means that you captured all the transactions. The second is accuracy. You need to verify that all the transaction we recorded is actually accurate or not. It might be possible some of the personal transaction are recorded as a business expense. How do we verify that? We will record each and every transaction with respect to either the receipts we have or the invoices we have. It is technically, as an our accountant job, we need to assume that whatever transactions happening on the business card is actually business related. It is the client's responsibility, or the onus is on the client to prove or let us know that they have made some expenses which are personal on the business account. But let's continue to ask them, please confirm if there was any personal expenses made on your business card. These are the transactions that we recorded in this month, and that's how we recorded. Please let us know if any of these are personal. We need to take that confirmation so we know that we are actually accurately recording the transactions. Okay. The next one is the it's not written here, but the next assertion we do is the existence and the occurrence. We need to verify whether that transaction actually exists or not. Let's say you have a transaction which shows that this is a deposit came in, but that client says that this is not the deposit for the business, it is actually a personal deposit. But how do we verify that? Either we need to take a confirmation from the client, or we need to go more into detail, like please provide the reason for that deposit, why the deposit is coming from place other than you. Like if it is an honest contribution, why somebody else is depositing into an account? If the owner is contributing his personal funds, we can actually clearly see in the description that the owner is transferring. But someone else is doing that, how do we know? We need to ask that question, otherwise your transaction will not be correct. So we need to verify we are actually complying with the existence and the occurrence. There is one more thing, which is cutoff. How do we verify the cutoff? Which also helps us by doing the verification through the bank recon itself. If we did the bank reconciliation completely, there is no other transaction that we have completed the cutoff assertion as well. The most important thing that we need to remind or we need to take care of is the credit card reconciliation. Most of the credit card does not have the transactions or does not have the date till the end of the year. They will be like 20th of December. They have like 15th of December. We need to make sure that we get the January statement as well, because some of the transactions for that particular period will be covered into the next month. Take those 10-15 days, whatever days that is coming in January statement, but related to December or 2025, you need to capture. Majority of the time it happens when the bank or the credit card are not connected in QuickBooks or Xero. If you are doing it manually, that's where this mistake will happen. But the transaction or the bank are actually connected in QuickBooks for automatic feed, it will not happen because that's the transactions coming in on a daily basis. So that's how we need to make sure that we are actually complying with all these different assertions. There are a couple of others like rights and obligations. We have presentation and disclosure that is technically not applicable for us. It is more on to the auditor's side. So those two we will ignore for now. The compliance part, obviously we need to make sure that we are complying with the US GAAP, with the IRS guidelines, getting all the receipts, getting the invoices in order, recording the transactions correctly, verifying the 1099s, reconciliation of 1099K with the books, recording the loan with the split of interest and principal and the escrow wherever it is applicable, not just recording the whole transaction as a principal payment. And then readiness, we need to make sure that we are asking the right question on time and we are getting the response on time. If you're not getting, you have the escalation metrics, you need to reach out to your manager will reach out to your partner. So the loan and fixed assets review, these are really important. So whenever an auditor or a CPA actually files a tax return, they want to verify how we have recorded the loan as well as the purchase or the sales of fixed assets. So then instead of us recording those transactions and keeping the documents somewhere in our laptop, I want to and encourage you to actually attach those transactions in the transaction, attach the documents in the transaction itself. So if you recorded any purchase of any asset, please make sure that that journal entry has all the documents attached to it, so that anybody, even your manager, your reviewer, your partner, can actually verify those documents rather than asking you to give those documents back to you. So that is our responsibility to make sure that we are recording it, and then we are also adding all the documents as necessary to do it. The question can come in that, let's say if we have the assets bought in 2024, we are doing the 2025 books and the auditor still wants to review it. how will they do it, or how the tax preparer will actually review those assets? We can always, whenever we provide the financial statement to the CPA, let's give a link to that the fixed assets paper, whether it's for purchase or sales, in the message itself, so they know they can easily reference to that document rather than going back and forth. Same thing will happen for the loan as well. For the loan, we need to attach either the statement that comes on a month-on-month basis. Sometimes client does not provide us the month-on-month statement and we have the loan amortization schedule. Please attach that link of that schedule that we prepare into that transaction, either the link or the file itself that we use for amortizing the loan. The revenue verification protocol, so which is very important. As you know, the 1099, all the merchant processor in US are supposed to file the 1099K for the customers or for the clients that they are providing their services on. What is the merchant processor? Basically, these are PayPal, Stripe, Shopify, all these different processor who actually collects money on our behalf and then deposit it in our bank account. We cannot go and ask give our bank details to each and every customer. Let's say we have 1,000 customers. It would be very difficult for us to keep a track of to whom we have given our bank account, to whom we are receiving the deposits. So it would be mess. So that's why these merchant processor come into the picture, where they collect the money on our behalf from the customer without any hassle, and they keep a certain percentage of those deposits with themselves, and then the net amount get deposited into our bank account. But as you know, we receive the net amount, but the 1099K which is issued by those companies are actually shows the gross amount. They do not show the fees deducted by them in that 1099K. So when we receive those deposit in our bank account, we need to gross that number out, so that we include the revenue as a gross number and then fees separately as an expense. And why it is important? Because that 1099K again will be filed with the IRS. IRS will say that, okay, they have given you $100 in the year, but in your P&L or in your revenue, you are only showing 98 because $2 was the fees that charged. Then it will be a mismatch, and then they will reject our tax return. So what we need to do is we need to show 100 in revenue and then $2 as an expense in the P&L side, in the expense side, so that that $100 actually matches. Sometime what will happen is it will not exactly match, and the reason would be the cutoff assertion that we talked about. Sometimes those transactions that gets processed on December 30th does not get appeared in our bank account until January 1st. But Stripe's 1099K will still show that in the 2025, let's say, because they have actually made the transfer, but it did not came in our bank account. Because we are doing a lot of books on cash basis, we will not record that deposit until it hits the bank account. And it hit the bank account in 2026. So then you need to prepare a reconciliation to show to your tax preparer or to your manager that this is the reason that it is not time. It will happen with the opening number as well. Some of the opening deposit that we have in the current year is related to 2024. Then you need to reduce that from your reconciliation, and you need to add the one that you actually received in next year, but it is related to 2025. That's how your P&L will tie back to what your reconciliation or 1099K shows. Owner's equity. So this is actually applicable on a lot of clients, not all of the clients. If some clients are individual, it is not applicable, but we have partnership, C Corp, S Corp, then it is really important for us to split the owner's amount between contribution and distribution. We also want to break it down between under the owner's contribution. We want to break it down under the each one of the partners' name as well. So we know how much each of these partner actually contributed or got the distribution as well. So for example, if we have partner A and B, we want to show in the books owner's contribution partner A and B, then owner's distribution partner A and B, so that any point of time the partner A and B can actually see how much money they have contributed and how much money they have distributed. We are doing an additional thing in one of the books or for one of the client, where we are actually breaking it down in one more step, where we are showing how much money they draw or how much money they contributed in that year. So we have owner's contribution partner A, then year 2025, then partner B year 2025, and then owner's distribution we will have the same breakup. It is not applicable on all, but it is actually applicable on one of the clients, so that client will actually follow that kind of routine. But we do not want to split it into the year for the rest of the client, so let's split it amongst the partner itself. Yeah. The general ledger cleanup. So this is really important. As you know, as part of the month end, we should be doing that. There should not be any suspense account. I don't want to see any suspense account whatsoever in our books. You can use the uncategorized expense and ask my accountant uncategorized income. That's fine. But those questions should be answered to the client, but no suspense account whatsoever. We want to have the complete transaction detail. That means that the vendor's name should be coming in. For the deposit, the customer's name should be coming in. Yeah. Review the miscellaneous account. There should not be anything that should show miscellaneous expenses. If you're not able to tag it to the any particular transaction, please do not tag it to the miscellaneous expense. If you're not able to figure it out, ask your manager. If the manager doesn't know the answer, they will reach out to the partner.